Welcome to the Measure Success podcast, where we talk with top leaders about effective strategies that inspire success. Today, this episode is brought to you by 40 Strategy. 40 Strategy is built to make strategy work for small to mid-sized companies. We have a great tool called Growth Driver. As a matter of fact, we've used with Breakaways, one of their clients, and where we do analysis on how to increase the value of the business, and we actually work them and could provide amazing return on ROI to get your multiple to increase the value of your business. Anyways, if you want to learn more, go to 40strategy.com. But that is not what this is about. Today is about meeting with Michelle Röse, who's the co-founder and chief operating officer of Breakaway Bookkeeping and Advising. It's a firm that specializes in providing fractional CFO services for small to mid-sized businesses. She has over 15 years experience in high-level financial roles, including CFO, controller, business manager, et cetera. And not only is she have the Breakaway franchise that she operates with, but she has her own firm as well. So she has the big picture of helping to expand businesses, but she knows how to actually help you out. Michelle, welcome to the Measure Success podcast.
Thank you very much. I'm really excited to be here.
All right, you are doing something different, and I'd argue it's the most important thing. And where you are focusing on, which is cash flow.
Yes.
You know this, and I know this. Every small business owner is listening to me. The vast majority don't look at their income statement. They don't look at their balance sheet. They just look at their balance in the checking account. And that's how they know whether they feel good or don't feel good. The problem that you and I both know, Michelle, is that doesn't mean you are making money.
No, it does not. Or that you're on track.
That's right. It's just a moment in time, right? It's just a moment in time, your cash flow. And it's amazing how many times people will run into problems as we help out with taxes. And if they haven't put their money away in a separate account, they're at risk, right? At risk of all of a sudden having a negative surprise around April 15th when all of a sudden the tax person didn't work ahead of time and they have a big surprise. So you guys are working on a new tool that you've developed internally to help out with cash management. Why don't you start explaining why you got there first, and then what type of impact is it having with the clients that you're working with who are using it?
Yeah. So our big question being that we work with the majority of smaller businesses. Now, we work with businesses that have grown beyond solopreneurs. They have, anywhere between 5 and 50 million in revenue. So the ability to understand all the things that are going on are now outside of their control. And so really what our business owners and leadership teams wanted to know is how much cash do we have and are we going to make it through this next week? And so it was really great. And that's how this plan was really hatched is one of the business owners said, I would really like to enjoy my beer this weekend. Can you please tell me we're going to make it through? I was like, yes, I am an advocate for cold beer. Let me help you. And so really how we came to this is we use both current cash balances for 7 days out expenditures that includes, EFT, ACH, accounts payable, and then how much operating cash is left after that. We also track things like AR balance, and we lean heavily into budgets. Now, when we say budgets, we mean we got to predict our revenue and our expenses on a monthly basis. And so we're keeping track of all of those things. We're keeping track of cash. We're keeping track of accounts receivable. We're keeping track of your monthly budget and how are you doing on that compared to where we are in the month. And so all of those things compiled together makes actually a kind of a game board, actually. And you get to kind of win these different elements. And if you win more over time, we've seen incredible success in the businesses that lean into this because they're watching all of those things on a weekly basis. And what that turns into from the clients we've utilized this with is an average of 50% revenue increase because they want to continually do better and hit those marks, whether it's revenue or expenses.
So I wasn't familiar with that statistic coming into this.
Mm-hmm.
I mean, a 50% improvement, right? Mm-hmm. That's huge. And, it does make sense though. It's interesting when we work on the strategy side, we love to do weekly sprints.
Yes.
Right. And the why is because often people look at things monthly and of course delayed, in traditional bookkeeping, right? At best, they're getting information 2, 3, 4 weeks, sometimes a month, sometimes 2 months later, depending on who they're working with. And everything's in the rearview mirror.
Hmm.
right?
Right.
Like they're like driving forward, looking in the rearview mirror,
Hmm.
and it's late. It's like they're looking even
Hmm.
further behind.
Hmm.
When the reality is they need to be focused on what's happening going forward and what they can control today to have an impact on the outcome, right? That's what's often missed. And so these insights are giving people, your clients, they're giving them more insights today. So how go into you describe some of these pieces, and I'm assuming this is the dust statement, like your credit card payments, right? That kills people sometimes, right? They like, oh, I'm fine. The next thing you know, they have a credit card payment at the end of the month, or mid-month. That catches up on them. Is it including both, once again, the balance sheet related liabilities as well as the income statement things that are coming through?
Yes. Okay. So we put together kind of a 4 month average. So if we take these 4 month averages, we can extend them further, but it basically maps out on the day, like what charges are coming out. So we know what to expect the next 7 days. And so we can always like put that on and we know what effect it's going to have on our cash. And we're always forecasting out. Now, the most successful people get these in 7 day increments. We have extended it to 14 days that our companies just may not be ready for that information that quickly. But yes, all of those things are taken into consideration so that we can monitor cash flow. But the really cool thing, and you talked about the importance of the rear view mirror and how that's completely outdated, right? So what can be helpful is using that prior year information because the first step is creating a budget. This whole weekly report doesn't work well unless you have a budget for this year. And I'm going to call it a budget and then tell you you and I know what the differentiation between a budget and a forecast is. But at the beginning of the year, we roll out a budget and we're going to use things like your trends in revenue throughout the year. But one of the things I really like to do when I'm budgeting is I pull the revenues by month and then I pull the top 10 invoices for each month. And then I sit down with the team and I say, of these top 10, how many of these were flukes, like one-offs, like one-time situations? And this really came to be because of all of the government subsidies that occurred and the bookkeeping errors in those. And so often we would see spikes in revenue that were just inflated temporarily for one reason or another. Maybe they got a huge insurance settlement, but that can throw your numbers off if it wasn't budgeted correctly or reviewed. So having these types of information is super important. And then the next thing that's important to understand is of the months that you have revenue mapped, is it linear? Like if we're halfway through the month, is it a realistic expectation to say we should be halfway to our revenue target? While that might be true for a lot of companies, I have one of my companies that's a moving and storage company, and that is not how it works for them because people don't move mid-month. They move usually at the beginning of the month. So beginning and end. And so we know that the vast majority of the revenue is going to come that first week and the last week. And so we have to plan, and that's fine. But it's one of those things where it's all about expectations. Where do we expect to be, and where are we based on where we are right now in the month? And how that helps is when leadership teams see, like, okay, so we're 50% of the way through the month, and we're 50% of the way to our expected revenue target. Let's check out expenses. Ooh, wow, we are 50% of the way through the month, but we're over 80% of our expense budget. So what do? We can make real fast decisions. Like, okay, we're going to stop spending any money on travel, upcoming travel. We'll hold off until we need to make those purchases. But there's like minor little adjustments that can like hit your targets, and you can either like protect cash flow, or if you're doing really well, what is the return on marketing efforts? Like maybe we can turn that cash, like turn that expenditure into additional revenue. So it's just a really great tool that helps the leadership teams make decisions, pivot, and maybe go to the project managers, maybe go to their admin staff, but at least we're not sitting on this data and doing nothing.
Yeah, it's remarkable. Like the value of the timely information, but what's really valuable is making changes, right?
Mhm.
Making a decision of, oh, hey, and sometimes it's the opposite. Sometimes, like for example, I'll just use a simple example of you perhaps using Google AdWords to grow your business, and you're using just return on ad spend. You're getting like a X return on ad spend,
Mhm.
and it'll be interesting. Someone will say, well, we've spent our budget. But then if you like help them out with analysis, go, do you realize if you spend another dollar, you're going to make $7 more? So it's okay to like pull the trigger to spend more, assuming you could fulfill it, right, from a fulfillment site. And it's amazing how many times people will get caught. They won't realize the triggers that's increasing their business or not. They'll just kind of stop in my budget. So I can't do it anymore. I was like, whoa, no, you spend more of this. Now there's usually a point of diminishing returns, right? But if you're still tracking that, you can see the results.
I have a great story about both of those two things that we looked at because we love data, right? It doesn't all have to be about dollars, it's data. So for the moving and storage company, they weren't hitting their revenue targets. And so we took a deeper dive because it's really a moving company can't move the market. The market is what it is. And so what I did was I pulled the total number of house sales in their respective service area. And I said, previously, and all the numbers passed, I'm like, okay, you've had 65% market share. That's incredible. That's a really great, you have a really great reputation in this market. Well, so that then becomes the norm. Okay, so as long as we're at or above 65% of the market share, that's really great. Well, so they were just pumping more ad dollars into the market because they wanted that market share. But when we pulled the data from the voice over IP, so their call logs, no one was answering the phone. There was an enormous amount of interest and calls coming in, but they didn't have the right people in the right seats. And that's what it takes, is just someone to like navigate these numbers, because it's not all about dollars, it's data. And so we were looking at things like, okay, market share as it relates to advertising, and we're looking good there. So I'll go. What's the holdup? The phones. No one was answering the phones. And so once we were able to reallocate labor resources to that, things started picking back up again.
I love that example. And it's amazing when if you don't really go through the data, you can miss it, right? And you've probably heard the term of leaky faucet, in regards to business, but that's like literally like pouring your faucet directly out into the gutter. There's no value if you don't realize you're not picking up phones. I've seen this with email like type thing. Like you have something going email, it'll go to this neverland location, right? And it's like, oh, that lead just literally left. I mean, this even happened to me one time. Like I had somebody, I'd spoken at an event, and like, Carl, I filled out that form. Didn't you get it? And I was like, and then you wonder how many people did you not get, right? Like what was the amount of business that, and this happens for so many companies, like just like you said, you have these leaky faucets, but it's awesome how you are tracking that really return on an investment, right? You're going beyond, that's even going beyond, right? It's not just cash management, but it's understanding what leading indicators are leading to the outcomes, what expenses are leading to more revenue, impact an expense or not. When I'm kind of curious of your clients' response when they've gone through this. Have they been overwhelmed? Have they been excited? What's kind of like their response when they start getting involved in a weekly pulse of their cash management?
Nervous at first, but I think that they're energized because the amount of clarity that they've never had before. They might know how much cash is in the bank, and they might be able to pop on real quick and understand AR, but no one has ever given them, based on where we are in the month, where they should be as far as expenses and revenue is concerned. And so everybody in the business, because really the entire team, your entire team at your business has to do with building a budget. And that's really a unifier. People are like, oh, I hate budgets. And I'm like, no, it's the great unifier, because it keeps everybody accountable and everybody has to agree to like whatever these numbers are. So that's great. But then the second thing that's great is that now we know, okay, which one is off? And if we are off, how can we put all hands on deck? How can we support everybody? And who doesn't want to be supported in hitting their goals? So I would say, what is the outcome of this sort of thing? Clarity, enthusiasm, continued growth. I kind of have to slow down clients, because sometimes when you see, and you've probably seen this, where businesses in their fifth or sixth year just magically triple in size, my first question when I get on the phone with them is, how's your marriage? And inevitably they're like, not great, not great, and it's like, okay, so let's talk about like purposeful growth, because I can see that like you're onto something, but these things sometimes come at a cost. So how do we, for everybody on your team's sake, maintain momentum, but just kind of be very purposeful about wellness, health, relationships? And so I'm not one of those accounting people that just wants to make money at all costs, tax mitigate at all costs. And we could go into that whole tangent, but I'm really, really passionate about making sure that everybody feels great about the direction.
I think it's really well said. Once again, anybody who's chosen to have a family and be an entrepreneur, right?
Hmm.
It's,
Hmm.
I mean, being an employee is hard, right? For
Hmm.
depending on your situation and where you're at. But
Hmm.
being an entrepreneur is a whole different level because you're not just responsible for your own mortgage and rent. You feel responsible for everybody who's employed with you, right? There's this stress, right, that goes on. And then, as you said, when all of a sudden your business really starts ticking up to a different level, it does create this. Losing family, relationships over it is not really worth it, right? At the key part of it. But like there is though an ability to how and right. See, I think sometimes people get caught up in the or,
Hmm.
like it's this or that, but it's like, well, how do we now start? How do we change what we got us in the past is not good. We're going to go where we need to go next. And so usually a big thing that happens that next growth path is, well, you need to have standard operating procedures. Everyone can't just rely on you anymore. You have to actually delegate and get responsibility for people you can trust and do different things, right? There's different pieces. But I just want to ask you, because that was a really interesting observation of at the fifth or sixth year, things start exploding. Why do you think that is?
Well, I think that clarity is the biggest thing. People, when they're in that solopreneur level, can kind of like draw that out. Or if they get a small team and maybe, like you said, leaky faucet, but when everybody is held accountable every single week, it's incredible how those leaky faucets tend to sort of fix themselves. And then people get really excited about the momentum. And there's so few opportunities to win in life out of youth sports that this sort of game board is really exciting and it can be addicting. So sometimes I have to remind people like, okay, yes, this is super fun. And at what cost? Is everybody like doing well? How's employee retention? Things like that. Are we focused on, making real connections, not just with our clients, but also with our employees? That is our number one concern, and your families.
Yeah. I think well said. Going through that. So when you're working with your clients today, how do you measure success?
That's actually a question. That's one of the first questions I asked them. I said, okay, so tell me about how you started this business. And I love how their eyes just light up, because they're like, well, and they have this great story about how they left an employment situation very similar to the business that they started. And these were their ideas. And this is what it looks like now. And that enthusiasm is incredible. And so then I asked them, when you started this, what did success look like? And I get the most interesting answers. And it's never a lot of money. It's something unique. Like, I wanted to take 2 months off to go hike in Spain, or, I really, really want to have, a location in all of the 50 states, or I would love to have, like in my vision, I have this huge holiday party where there's hundreds of employees, clinking champagne glasses. And so it's just really interesting to vision cast what success looks like and then build key performance indicators off of that idea of success. It's very basic to create, it's very easy, basic, and mundane, really, to create KPIs on revenue and expenses. But what is really fun is, okay, one of my clients does added average hours on the Peloton this week. And I just think that's so cool. It's like, what a great KPI that we've just incorporated in our monthly financials because it matters. That's what success looks like to them.
Yeah, I love that. Measuring what matters, but measuring beyond just revenue and profits, right?
Hmm.
I think at its core, every business has an obligation to be profitable, or otherwise you're a not-for-profit and you're not going to last very long, right? You have to do that side behind it. But when outside of that is how do you make an impact? That's a different
Hmm.
statement, right? And
Yeah.
and when you can start getting into aspects of, how is your health? How is your relationships?
Yeah.
There's somebody had on a guest recently, and I loved it. He said, no, we do these concepts of same thing for the employees. Like, what's your dream board? You
Hmm.
want to go to France for 2 weeks, or you want to, go on a trip to somewhere, whatever it might be. And then they're asking them, what are you doing to get to that outcome? Right. On
Hmm.
the employee level. So not just the company level, the business owner level,
Hmm.
but like the employee level as well.
Hmm.
You creating success, happiness, joy. And that's fun, right? When people like us who are being counters by trade, right? We can incorporate, if you may, use the term HR related type but this is just being a person, right? It's just caring about what really matters. So I think that's huge. Let's if you don't mind, just spend a few minutes on kind of and got involved in this, and tell me, what type of habits do you do? You have got a family, you got 3 daughters, you mentioned.
Mhm.
How do you yourself create positive habits to keep your own stuff together?
Yeah, right. Because being an accountant is or a finance person, it's interesting because when things are going well, that's the expectation. Like you're here, so my expectation is things go well. And it's great when it does, but when it doesn't, it's like, okay, how do we motivate? How do we encourage? How do we, and all those things draw from somewhere. So then who's filling our bucket, right? And that's really why and how we created Breakaway. So Breakaway is a company that Shay Keats, Kristen Keats, Martin Mull, and myself founded. And really the vision was, let's get people excited about their financials or bringing joy to accounting, because there actually is a lot of joy. The reason is it's never been presented that way. And it is exciting. It can unify people. And that's what we're passionate about. And nobody had really created a group of individuals offering these kind of CFO, controller level solutions to businesses that has nothing to do with tax. Like there are people that offer those things, but often those come in conjunction with tax, and the people that provide tax have been trained up in tax. And so their glasses that they wear are tax mitigation. And the glasses that I'm wearing is I want to make, your tax person knock their keyboard off their desk when we turn in their financials. I'm like their worst nightmare. They're like, oh, this was not what we planned for. And I'm like, wait, we killed it. But no, I was passionate about this. And part of it is we built this community of financial advocates. And we said, let's build community for each other. Let's build each other up. Let's continue to train. Let's help each other with this. And what that looks like is community and wellness. Community and like reading books, and we have training on ongoing interest in development apps and apps that are currently out there, which is huge. So I think if we're talking about how do I find health, wellness, balance, aside from working out every day, which I love to do in the morning before everybody wakes up, is leaning into the community at Breakaway. And also I get just lit up in the best of ways when my clients do well, because I really see it as a partnership. So when they win, I get to come alongside them and just share in that joy. So we like amplify the joy. We times that celebration by 2. And when things are hard, I'm right next to them, equally yoked. And so we have the burden. So it's like we double the joy and we have the burden when we're next to each other.
So, and you're now asked the question, of course, how do you measure success now in your personal life from this perspective?
Oh gosh, can we build a KPI around calls from the principal? I'm like, oh, it was a good week because I only got 1 call from the principal. No, I have wonderful kids, and right now, that's a great question. Right now, I try to spend the most amount of hours with them. So my KPI is reducing hours in front of a computer and increasing and moving those hours to either sidelines, driving number practices, doing everything I can alongside them, since I know this season is short.
Yeah, good for you. Time, it's that one thing we can't replicate, right? Time's going to happen. It's going to pass, and how we can help fulfill it. And spending time with our loved ones is important, right? It's an
What
important
is
part of the whole process.
what is your KPI?
Wow, that's a good one to ask here at the end of the. We don't have time. I think we're running out of time here. No, for me, it's not just one. But at its core, what I'm grateful for is a couple of different things. One is to be able to have freedom of choice, meaning I at the end of the day can control my schedule. I'm not saying that I don't have deadlines for my clients and things to do, but I have ability to be able to go across the country to see my son at the Naval Academy. I could see my daughter who's at TCU playing a soccer game. I now have a son who's working for our business. I have a daughter that I just unfortunately I only spent a couple minutes with her, who's teaching at 6th grade at a local elementary here, and having relationships with them, and fortunate to have with my wife. So to me, from a personal side, that's a pretty important part. And then there's other aspects from my belief system, supporting that consistently, trying to get what I call maintenance today from a physical aspect, but I do got to admit, I got to breathe more. And I'm not
Yes.
talking about seance, and I'm not talking about, meditation for 20 minutes. I'm not talking about that stuff. I'm just talking about like literally just breathing from time to time. That is a KPI I should track more. One of the people who works with this, Dr. Tanya Smith, she will sometimes say, Carl, would you breathe? And so that's a KPI I think I have to add into it. But thank you for asking the question.
I really like
And
that.
and in my journey, I have a long way to go. It's amazing how sometimes I think we've got it figured out, and then you just realize there's so much more, right? So many more ways we can help make a difference. And for us, as we just recently came empty nesters, and of course we have a son who's briefly with us for a moment as he's working for us. It's amazing, right? How your ability and your time and resources you could do to help manage to get amazing things. So, okay, let's what is perhaps a book you mentioned about the book clubs or reading groups, or what is a recent book or perhaps a book that you recommend regularly that you recommend to others consistently?
X is easier than 2X.
Say that again.
X is easier than 2X.
That's the Hardy book, right?
I think it's, oh my gosh, I'm going to butcher the last name. Boy. Yes, you're right. I apologize. Yes, it is. I was focused on the Dan Sullivan element because I
Yes,
love,
Sullivan and Hardy. Yes, Hardy's been writing the books and using Sullivan. They've been collaborating on writing, some books. And yeah, no, that's good suggestion. And no, thanks for that recommendation. How can people? You've been doing great things. I think once again, people who are struggling, and I, we didn't even talk about it. This has been a tough time to be in business,
yes,
right? And we didn't even scratch the surface, and we're going to spend just a minute on this as we wrap up here. Of course, just your observation, what you're seeing and hearing, right? I'm seeing it. It's a tough business environment. Wouldn't you agree?
yes, yes, it is.
So what's the one insight you can give to people who are there's a lot of small businesses that are really struggling right now, right? They don't have $1 billion in cash to withstand a tariff impact or losing money out of government spending that they historically had got, or, there's so many different things that have changed quite quickly that they didn't have time to react to. And there's no stimulus, there's no PPP land, there's no ERC that's coming to help you out. So what are you doing? I'm kind of curious to help give encouragement, help people change and modify what they need to do based on the reality, the current circumstances that are there.
I think runway is the biggest thing. When I take on clients, I ask them to get lines of credit set when things are good. And so assuming you've been a client with me before things are hard, usually we have some sort of cushion. The line of credit is not actually to use, it's to allow us to create, or it's allow us the ability to vision cast, plan, and make decisions outside of a scarcity mindset. Because if we can say, here's runway if we need it, would we still do this? We aren't thinking about, if we don't have the funds, we think about the opportunity. So that's the first thing. The second thing that I think of, assuming we have runway, because I like to give people, 90-day heads up, like, hey, this is how much cash we have. This is how much runway we have. I like to hear from leadership 3 solutions to a specific issue. So before the meeting, I'll send out like, hey, this is our 90-day cash projection. What are 3 solutions that you have to XYZ? And it may not be cash solution. There may be various different like inventory levels for specific things, but whatever it is, I like to get everybody much similar to kind of what you were saying earlier, where they asked the employees, and what are you doing to get there? Because it makes sure that the onus is spread across everybody and that strategy is a group think process. Like we all need everybody to come to the table with strategies. And I think it also helps people when they have to come up with solutions to be more accepting of other people's ideas instead of just resistant to change, which is most people's default. If things get really bad, so this is the worst thing, things get really bad, I usually ask my owners, is your family more important to you than your employee's family? Because sometimes they hang on too long for pride reasons. They will maintain employees for too long because they don't want to have to let people go. But then I have to ask the real question is, this whole thing goes down, including what you provide your family, or we can stop the bleeding now. And so those are the conversations I've been having. Not so many that last one, but I have had them.
I think that's really, really good insights. It is amazing. You know this because you see it. There's a lot of people that look great on LinkedIn,
Mhm.
but they're not making better than a normal employee wages that they can make in the marketplace, right? And
Mhm.
and
Mhm.
and they end up sacrificing so much for their employees and for their family, and it's remarkable. It really is remarkable. I mean, this isn't every business owner, but there's a lot of them that are that way, and partly they're an entrepreneur for a reason, right? But it's amazing the sacrifices, and I appreciate the couple things you said is, hey, let's look at where we want to be, let's create a sense of liquidity, but then
Mhm.
let's also manage the next 90 days. And you said, for anybody who manages inventory, boy, inventory can be a killer,
Mhm.
right?
Mhm.
It's like, oh, we're profitable, but we're hanging on to too much inventory. And that's
Mhm.
cash. Like, you need to generate and turn that into cash. And if you can't, especially in like what's going on right now with tariffs, people are buying ahead. Well, if you can't now sell that, you have a
Mhm.
cash crunch. Right.
Mhm.
And so, anyway, thank you. Boy, I wish we had more time, Michelle. This has been absolutely awesome to talk with you. Thank you so much for your insights. How can people connect and learn more about you and what Breakaway is doing?
Yeah, so our website, Breakaway BA. Now, I like to say that that stands for badass, but it doesn't. It stands for bookkeeping and advising. So breakawayba.com has kind of all the services, more about us, all of our incredible advisors and how we can come alongside. And or if this sounds interesting to you and you like people listening might be like, I would love to have my own accounting business. We're a great solution for them. So whether you're a client or a person looking to start their own accounting business, we're here for you.
Michelle, thank you so much for being a guest on the Measure podcast today.
Well, thank you for having me. It's been a delight.
To everyone else who was listening, I hope you've enjoyed this conversation. Michelle and her team at Breakaway Advisors have done really an amazing job. They really have the right insights to help you grow your business, get deeper on cash flow. You know, cash is king. We didn't say that, but cash is king. And if you can manage it more properly and make the right decisions and get out of fight or flight mode, right? If you get into thinking mode and how to do things properly, you have a better chance
Mhm.
of successfully running your business. And I think Michelle and her team do a great job of making that happen. So, as we always like to say on the podcast, we wish you and wishing you the very best at measuring your success, and have a great day.